Money, your vote, our future. Here's what we know right now from Tom Foreman.
With the markets watching Washington and Washington watching the markets, a high-stakes poker game is being waged over the $700 billion bailout. On one side, Democrats who want more regulation, more protection for consumers, and to clamp down on the corporate executives who contributed to the troubles.
No golden parachutes. Let them feel the hard landing that my constituents faced when they were laid off at Bethlehem Steel. Let them feel the hard landing of knowing what it's like to have your mortgage foreclosed upon.
On the other side, Republicans who fear if the drumbeat for market controls gets carried away, it will limit future economic growth, take jobs, and make the free market a lot less free.
Many of us conservatives are concerned that the cure of a massive transfer of money from the Treasury to Wall Street could ultimately be worse than the disease that we're facing in our financial markets.
Many Democrats and some Republicans agree on the need for control over CEO salaries of companies that get money. But with polls showing the public more inclined to blame Republicans than Democrats for the current problems, the Dems are pushing hard for concessions. Among them, an agreement for an emergency committee to oversee the handling of the bailout deal. Help for homeowners caught up in the mortgage mess. A one-year timeline instead of the two-year deal the White House wants, and provisions for the government to hold actual shares in the companies it is bailing out. That matters because, in theory, those shares would be sold off in the future to pay back to the government at least some of all that taxpayer money that is being laid out for this deal. But how much? No one even knows for sure what these companies are worth right now, according to the Center on Budget and Policy Priorities, a nonpartisan group that promotes fiscal responsibility.
The long-term cost won't be $700 billion. It's going to be somewhat less than that. The real problem is estimating what that cost is extremely difficult in this case.
Still, despite the difficulties hammering out the details, both parties are predicting a deal before the week's end. Tom Foreman, CNN, Washington.
Digging deeper now in the nuts and bolts and votes with Marcus Mabry, international business editor of the New York Times and author of Twice as Good, Condoleezza Rice and Her Path to Power. John Fund of the Wall Street Journal and author of Stealing Elections, How Voter Fraud Threatens Our Democracy. And Peter Schiff, financial advisor of former presidential candidate Ron Paul. He's written Crash Proof, How to Profit from the Coming Economic Collapse. Marcus, I want to start with you. What do you see the difference between the Republicans' criticism and the Democrats' criticism of this plan?
You know, it's kind of funny, Anderson, because whenever you have this kind of agreement on left and right that something's a bad idea, although for opposite reasons, you always wonder, well, you know, maybe they actually have something right. What we're seeing is the Republicans say this is too much government interference. It's not good. The markets should be allowed to function. What Democrats are saying is that this is a fat cat bailout, whereas American families are losing their homes and seeing foreclosure rates at historic highs. These guys who are responsible for some of this by getting Americans to take out loans they should not have are now going to get rewarded after their multi-million-dollar paydays and bonuses. They're now going to get let off the hook, bailed out by us, we the taxpayers.
John, you say this is an evil, but it's the lesser of two evils.
Well, I think it's becoming more evil with each passing day as people are attaching to what was a relatively clean bill their own ideas. For example, bailing out homeowners. That's a sinkhole that has no bottom to it.
Democrats are calling for that.
Yes, and also Republicans have their own ideas. I think the danger here is anytime you have must-pass legislation, I think, ignore policy and you focus on politics. The real danger is the timing of this crisis. We are 6 weeks away from an election in which almost every member of Congress is on the ballot. They are panicking like wildebeests confronted by lions across the plain. And I think the American people are going to be the worse off for this because the taxpayers caught holding the bag. If this were after the election, I think we could have a more rational, more reasonable, more prudent approach. Now we're panicking, and I think we're going to make some very ill-advised moves if we add all of these Christmas tree amendments to the bill.
Peter, you hated it on Friday. Does it stink any less to you now?
You know, what we're really doing is the equivalent of selling our financial souls to the devil. You know, it's Henry Paulson and Ben Bernanke. They're the Pied Pipers that led us down this path. Now they're going to lead us over a cliff. You know, sure, it's going to be bad if we do nothing. But it's going to be a lot worse if we do this. We need to get back to the free market, because it's not the free market that got us in this mess. It was all the government interference with the free market. It was the Federal Reserve and putting interest rates down as low as they did. It was Freddie and Fannie for creating the moral hazard that made possible all these crazy loans that let people borrow money that they couldn't afford. We need less government, not more government.
John, you certainly believe in the free market, but you disagree with Peter.
Well, I think I think Peter is right on the policy essentials. I'm simply making a political point. We are going to have a bill because members of Congress are not going to be stuck doing nothing on this.
Well, let's talk about
But the bill should do the least possible damage. It is a big mistake to have the government take an equity share.
Well, that's one of the big things being discussed right now, the idea that the government should take some sort of an equity share. Explain what that means.
Well, really, this is those who feel like we're actually giving Wall Street a free ride here after Wall Street made irresponsible decisions. They say that if the American taxpayer is now going to bail Wall Street out, the American taxpayer deserves some reward on the upside, meaning if these things actually improve, the American taxpayers should benefit.
Just like a bank which is loaning a company money would take an equity position, the government,
absolutely.
That argument is that the government should take an equity position in these companies.
In exchange for $700 billion or even what could be $1 trillion.
It's going to be less in the end, though.
Why is that a bad idea, Peter?
Well, first of all, it's a bad idea because, remember, we're addressing the symptoms of our disease and not the disease itself. You know, we're borrowing too much money. And what does this plan do? Borrows even more. It gets us into a deeper hole. And unfortunately, the taxpayers are not going to suffer with higher taxes. They're going to suffer with massive inflation. They're going to see the value of their wages eroded, the value of their savings eroded, as we have to print the money to fund all this stuff.
But, John, on the equity thing, I mean, to a lot of people, that would seem to make, I mean, to Democrats, certainly that seems to make sense. Why not give taxpayers an equity stake in these companies?
Because I think it's the opening wedge to government ownership stakes in corporations, which is the European approach. The Europeans have a different system.
You're saying it smacks of almost socialism.
Well, the whole thing smacks of socialism because we are bailing people out of their bad mistakes. Remember, the government created the conditions which led people to make bad loans. Everybody's to blame here. I don't think the solution, though, is to insert the government, which created the very conditions that messed this up, into helping to run these assets and corporations. There is no evidence they would do a better job.
Are foreign banks going to be getting money from this?
This bill cannot pass if foreigners get bailed out, because that will create a political firestorm.
But they're going to get bailed out. There's no way to stop it.
Right. I mean,
Absolutely.
these days, banks are so internationalized.
And the investing is internationalized. But the problem is the banks are actually already, we're going to see the Japanese owning a stake in Morgan Stanley, what was a premier American independent investment bank. That model is now in jeopardy.
Yeah, the minute you allow U.S. firms to sell these mortgages to the government, they could buy them from banks all around the world and then flip them to the government. There's no way to keep the foreigners out of it.
There's also, in the current proposal, I mean, some folks on Wall Street are going to make money off this. I mean,
a lot of folks on Wall
aren't
Street,
they?
especially the ones who were guilty of excesses already, and lack
How
of
are they going to make money off this?
and lack of greed. Well, they're the ones who are going to be bailed out. They're the ones who are actually going to now have stakes that would have kept plummeting in value will now be shored up. We've already seen it.
So would they still get their bonuses under this?
The worst part of this is when we started out with the Bear Stearns bailout, and then we moved on to the AIG bailout and the Fannie Mae Freddie Mac bailout. Every time you violate the basic principle of no bailouts, you create a long line. Right? What is the next company that is going to come after this bailout?
But John, where did you have stopped?
The auto companies.
Where did you draw the line?
I think you should have drawn the line at Bear Stearns a long time ago. And they didn't. So now we're paying the consequences of trying to decide when to say no. We should have said no at the beginning.
But you think no matter what, there will be some sort of a deal this week?
6 weeks before an election? What do you think? Of course there has to be. Members of Congress go home without
They want to go back home. They don't want to stay.
If they go back passing nothing, I think that they look as if that they're ignoring the plight of the American people. So they're willing to pass. They're willing to pass a bad bill rather than no bill.
Yeah, and remember, they're already extending this to credit card debt, to auto debt, so they're already going way beyond mortgages. And you know what? Now you've got Goldman Sachs and Morgan Stanley becoming banks. So after they've blown through their own capital, they're going to acquire a bunch of FDIC-insured deposits, and they're going to lose that too.
We got to leave there. Peter Schiff, John Fund, Marcus Mabry, thanks very much. I wish we had something more uplifting and happy to talk about, but I appreciate your expertise. More on